Here's something that people really need to understand. And I always try to tell when I mentor folks, especially young people, I always try to throw this in because as somebody who mentors other people, you don't want to be that person to tell them how you did everything perfectly. Because a good mentor, I mean, I'm able to be a mentor because I screwed up a lot of times. And, if you learn, I mean, I tell my kids all the time, please listen to me. I'm telling you this not because I'm smart. I already did it the wrong way. So let me show you how to do it the right way. I have already done it that way, the wrong way.
Hey everybody, I'm here today with a very special guest. Excited to have Doug on with us here. He has a wealth of knowledge to share about the markets. He's a former money manager. I'll let him introduce himself. But Doug, how are you doing today?
I'm doing great. Absolutely great.
So I have to ask, who is Doug Ferris?
Wow. I probably have to answer that in a lot of different ways, by the way. But hey, I'm Doug Ferris. I like to think I'm a humanitarian. I like to think I'm a soft guy. I like to think I'm a tough guy. Somebody likes to stay in shape. Maybe a little bit of an old guy as well. I'm a motorcycle guy. But really, I think the most important thing I could say is I'm a regular guy.
A little bit of everything. And so tell us about yourself, because I know we had spoke a few weeks ago and about your career and entrepreneurship and all the things you've done.
Yeah, well, I had a 30-year career in the financial services world. I spent the first 8 or 9 years, I guess, working for other companies. And about 22 years ago, 23 years ago now, I started my own company along with my business partner as well. And 22 years, 21 years later, after starting that, I cashed in. I basically sold my share of the company to my business partner, who's just a phenomenal money manager as well as business guy as well. But in those 30 years, it also gave me an opportunity. You mentioned being an entrepreneur. So it gave me the opportunity to do some other things as well, too. I don't let the earth stand too long underneath my feet. I do move quite a bit. I've owned restaurants. I had a sports bar for almost 10 years before I sold it. And I've been in the real estate business most of my life, buying real estate as rentals and then upon my retirement, selling them all off. And so now I'm putzing around. In fact, I'm dressed like this because I'm actually doing a little physical work today, too. I'm buying a house here and there, fixing it up and selling it. Truly, I'm just trying to keep busy.
Got it. So yeah, you've done it all. I guess for today, I'm most interested in hearing about your experience with the markets, and you've had all these assets under management. And I guess we could start with what are some of the most important things that you've learned about money and life, I guess, over the years here?
Well, if I say some of the most important things I've learned really from my clients that I've had over the years. Some very smart people, some people that didn't do it the right way. Unfortunately, you learn that way as well, too. But I think if I can give some of the most important advice that I could ever give anybody, because your neighbor is involved in a particular portfolio doesn't mean you need to be involved in that particular portfolio. You have to do what you're comfortable with. And quite frankly, nowadays, looking at the market, if you're happy getting that 4.5% rate from your bank or your brokerage account, then that's probably where you need to be. Right now, as you know, with what's happening in the world, especially right now in the Middle East, what's going on right now, very difficult to pick and choose. Very difficult.
Yeah, you definitely bring up a great point, because I see it very often. I think now more than ever, just with, social media and, financial channels and everything. There's definitely, it's easy to get caught up in this herd mentality where you get FOMO, you see something's doing well and you get in. And yeah, I've definitely, experienced that as well, that a lot of the times the popular trade is best avoided. And I think Peter Lynch would say the same.
Absolutely. The other point behind that is in the past years, earlier in my career, and even as recent as 10 years ago, you follow trends, economic trends, economic analysis that you can get on different segments of the investment world. But today, if anything, it's a stock picker's world. And really what I mean by that, so your audience really understands, you and I had a conversation regarding an ETF that we talked about. It was an energy ETF. And that was a way to buy all the energy versus picking individual companies. But quite frankly, today, it's a little bit different because, and I'm not making these suggestions by any means, but if you bought Chevron, it might be a good buy. Whereas if you bought the entire ETF that has the rest of the oil companies in there, it might not be a good decision. So the point is today, I'm not saying to stay out of the market. What I am saying, it is absolutely a stock picker's market. The individual security that might do a little bit better than another one, but in the same industry, which is a little different than the past.
Yeah, that makes a lot of sense, and we've even seen, even if you look at the S&P 500 this year, it's largely up thanks to 7 companies, and the other 493 are if you subtracted Tesla, Apple, Amazon, Nvidia, Microsoft, and Meta, I think I'm missing one. But without them, the market is red this year.
Yeah, Google.
Google, yeah.
I think I saw. Now this is a couple of weeks ago. If you took those all out of the market would be negative 2%.
Wow,
that's a good example that you brought up of a stock picker's market right now.
Definitely, yeah, and that definitely seems to be holding true this year. So yeah, and then kind of piggybacking off that, I know, my favorite company, Tesla, they just reported their earnings last week. And this was the first report, I've got to say, that I can remember that didn't really paint a very positive outlook, at least for the short term here, maybe the next year or so. Yeah. Maybe foreshadowing of, what's to come. I know that when we last talked, we were talking about potential recession. What are your thoughts on the current state of the market? I know you mentioned what's going on in the world and lots of craziness, but do you think we're headed for a recession or currently already in one?
I would still say that we are currently heading for a recession, even regardless of the war going on in the Middle East right now. There were too many components that are going to be coming together in the last quarter of this year, first and second quarter of next year, that are going to be detrimental to the overall market. Obviously, the major one would be interest rates. I mean, we literally have trillions of commercial mortgages out there that will be coming due here soon and will be recalculated at different interest rates compared to where they went in. And I think probably some of your audience doesn't understand that if you go out and buy commercial mortgages are different than residential mortgages. It's not like your house. If you buy a commercial building, the most they usually will give you is a rate that's good for 5 years. And then it's recalculated, some of them as much as 10 years. And that's what's all coming due. So you may have bought that building at a 4% commercial rate 8 or 10 years ago, or 6 or 7 years ago. And I could tell you that you're going to probably be in a vicinity of 8 or 9% in commercial paper coming up. So think about how that increases the debt to those particular owners. And then it has a trickle-down effect on the people that are leasing those properties as well.
Yeah, I've looked at some REITs lately. I know they've been totally beat down, but I mean, is that something that would further negatively impact them as well?
Without a doubt. And I got to tell you, it's a scary part too, because when you see those yields that those REITs can offer, they look very attractive to people. Very attractive. The problem is if you lose the value of it, it doesn't matter what that dividend was paying or what that yield was paying. So we got to be really careful. I've always tried to be careful about REITs. I like the concept. If I'm going to use a REIT, it's going to be a publicly traded REIT, which makes it more, liquid. So you can sell out of that. Hopefully, doesn't mean that's a guarantee, but you definitely would have a liquidity issue when it comes to publicly or non-publicly traded REITs as well too.
Got it. And so, for yourself, I know you own real estate. What does your portfolio look like? Do you have index funds? Do you like individual stocks? What are some of the things you're looking at these days?
If you look at my portfolio now, you might think, was this guy really a financial advisor? I can tell you that I got about 70% of my assets in cash. And the rest are individual securities.
Wow. Okay. 70% cash.
And that's the hand picking as well. And it's not necessarily the cash because I'm afraid of what's coming down the pike. I want to be ready to be able to buy in to the market.
Yeah, that's definitely something I've been trying to find the right balance the last couple of years because, going into 2022, I definitely didn't have enough cash and just kind of figuring out, is there a number to always have in cash? Because, I know that they say not to time the market, but inevitably these massive crashes come. And if you can't capitalize at that point, or if you can capitalize, like you saw stocks like Tesla and Meta at the beginning of the year that go up 100%, if you're able to buy them when they're at their lows. So do you have a philosophy on how you approach your cash position?
Well, let me also say this about timing the market, because that's a good point. And you're right. Our class, 101, the vesting says, don't try to time the market in normal circumstances. But I can tell you for our clients, after the pandemic of 2020, I can tell you most of our clients, when we brought them back into the market, we were buying for them Apple, Amazon, Tesla, Google. They did very, very well with that. When you have an unprecedented drop in the market, there's nothing wrong with trying to take advantage of the market and doing some timing there. Now, you shouldn't be all in either as well. So I think during these times, when everything will go down in some sort of recession, if that recession does take place, pretty much everything will go down. And it goes down simply because the market goes down. So if you have a stock that you've researched, and I suggest you do your research, if it's a good company, you got to buy it again. You mentioned the drop in Tesla the other day. I bought it again on that drop. And I had this conversation with my son, who's about your age too. And I said, hey, look, if you liked it at 256, you mean you don't like it at 220? Right? So that's also a way to do what we like to refer to as dollar cost averaging. It's a very smart way to invest your money. And listen, when it's time to go back, or when you think it's time to go back in the market, you still shouldn't be 100% invested.
Yeah, Tesla's a perfect example of, last week it was down 15%. And then I think today it was already up, a few percent. It's a very volatile stock for sure.
It is, but it doesn't usually follow the market all the way down, though. If you watch Tesla, we had a couple of really negative days last week, and it didn't drop as much until that one big drop when they obviously reported that day.
Right. Yeah. And, fundamentally, I know that the business is great and definitely probably in a much better position than all the other automotive companies. I know General Motors reports today. I'll be checking that out later. But, I know at the end of the day, the stock price is largely out of control in the short term, whereas, the business will survive, the worst here. And that's all that really matters. They'll come out the other end of this and they'll really be able to prosper when we get back to, maybe better times with lower interest rates.
Right. But I do believe what you're saying is accurate. Tesla, I think they're the best of the best in the EV business for sure. I read an article not that long ago that, believe it or not, the domestic brands, every e-vehicle they sell, they're losing $60,000.
Yeah, and that's the other huge part. They're the only maker of EVs that in the world that's doing it profitably. Every other company, like you said, is losing on every EV that they sell, which is pretty crazy to put in perspective.
And it's all about Elon Musk too. Like him, don't like him, it doesn't really matter if you like him or don't like him. But you know what? He's pretty good at whatever he does.
Yeah, I've been reading his the Walter Isaacson biography on him, and really fascinating stuff. There's so much in there, and it just explains like every time there's a problem at this company that everyone says is impossible, the guy figures out a way to get it done, whether it's working around the clock, whether it's, inventing new processes. It's really incredible. Just like he's like the Da Vinci of our time, I think. Here.
He is. I'd really say he's the Henry Ford of modern times.
Yeah. So I guess how would you go about, like, if you're building a portfolio today, or for someone, let's say like me, who's 27? I mean, what would you focus on?
Boy, I'm glad you said that, because for those that may listen to this, don't want to lead them down the wrong path. You're 27, right? I'm 57. I'm sorry, 57. I was born in 57. I'm 66 years old. So there is a major difference in those two investors for sure. 27 years old, you got to be able to have the patience to buy, whether it's a sector of the market or a particular security that you research now. And if that's somewhere that you'd like to be, you have to be able to have the wherewithal to, once you make that purchase, understand that you're on a long-term investment. Okay. Now, I know you got like to trade, and I think you're going to be a little different than a lot of folks out there. If you take a slice of your portfolio and you say, hey, this is my trade money, I don't have any problem with that at all. But I can tell you, I wish I knew now what I knew, I wish I was 27 like you when I knew all this. But if you're a buy and holder and you're doing your research and you're buying the right companies, most times, obviously not all the time, but most times in years to come, you're going to be in great shape. You just have to have the patience. When that stock you own takes a big dip, you got to do one of two things, or both of these things. You hold, or you buy more of it and dollar cost average in. Providing, again, I keep saying this, you did your research. And honestly, the best research is just be out there in the community. See what people are doing. See what people are buying. That type of thing as well, too. Those trends.
Yeah, that's a bunch of great points. And it all comes back to, like you said, your conviction, knowing what you own, and, knowing when it's being mispriced. And yeah, the second part there of like kind of just utilizing what you actually use is something I've been kind of doing more of. Like, I've definitely focused on a lot of innovative companies, but I'm starting to consider that as well. Just like, what do I actually use? Because that's the best in the field research to see what's popular. Like I was just shopping down at BJ's. I don't know if you ever go there.
Yeah, sure.
A couple weeks ago, that's something I've used for years, and so I started looking into the company, liked what I found, and yeah, that's the best place to start, probably, especially just for like the average person. Like, what are you actually using in your day to day?
Yes, you'd be surprised if people don't really pay attention to that. It's you just got to see what everyone else is doing, and you hear the trend. I mean, think a couple of years back, Lululemon. All the ladies were into Lululemon, right? It was unbelievable, and it turned out to be really the stock that we should have been on all over. Now, of course, they're into not only women but men as well too, children. It's blown up.
Yeah,
a good long-term stock.
Interesting. Yeah, I'll have to look more into that one. Yeah, the retail brands like that do make me a little nervous, just because I feel like it's so cyclical, and you just don't know when things are going in and out of fashion. Like, even I know Nike's kind of been having a hard time, but the way I've kind of approached that whole industry is I like instead of owning the individual, like going for the Amazon, or I like TJ Maxx too. That's a store that's always packed and has an unbeatable, value offer, and they're not selling their own brand. They're just buying what they know is popular to resell.
I feel the same way. That was a good description, because I do like TJ Maxx for that reason. Of course, Amazon is a great company to own. Amazon does it all. And as a young person, that would be a stock that you have to own. And, take a look at some of these others. And by no means, by the way, is this a recommendation, but just a conversation. I mean, look at stocks like Procter & Gamble that pays a decent dividend, but pretty much is going to do well almost in any market, any type of market, because it's such a necessity. Johnson and Johnson. I mean, Johnson and Johnson is a stellar company. Even through the class action lawsuit, barely lost anything during those times as well. Pays a good dividend. That's always going to be out there as well.
Yeah, Johnson Johnson, I like definitely just a great, it's almost like a hedge, I guess, because it really doesn't move as much as the market, especially in the bad times. It has been pretty reliable. And yeah, you brought up Amazon. I know they have their earnings this week, which I plan to cover on the channel here. That's another one of my major holdings that I really like. And I was just watching a video yesterday about all the robotics that they're using. I don't know if you've seen the new one. It's called Digit. It's like an actual like humanoid robot, with arms and legs that they're starting to utilize in the factories. So they're really on the cutting edge, and there's just so many positives in that business. They've got like this advertising segment that's really just getting started over the last few years, and it's like I think it's going to compete with Google and Meta. Like they're kind of like the kings of that digital ad space. But Amazon, I think, is getting ready to give them a run for their money. So that's definitely a company I really like, too.
They want to be in the space program as well, too. I mean, Amazon is going to be around a long time. My biggest fear I would have about Amazon is that the government deems them a monopoly.
Yeah. I know they have the that FTC trust going on. But I don't know. It sounds like I know that like I don't think they can really get them, and especially what they're focusing on, it doesn't really make sense to me because I think the numbers are something like globally Amazon has like 3% of the retail spend, so which is crazy to think about. It shows you how much room for growth there still is.
Right.
And then I think in the US they have maybe 40% of e-commerce, if I'm not mistaken. So it's definitely gonna be a challenging case. They'll probably settle, I'm sure.
Right. Yeah. But it's a great company. I really admire people like that. In our country, sometimes we push back on people like, Elon Musk and, the people that have become multi-billionaires. I think people like us should look at those people as inspiration as well, too. That just shows what an entrepreneur can do really in our country as well. So, the fact that people get too rich, I don't know. I mean, Amazon, look at Elon Musk, for example. So, and, we certainly don't want to get political on this, but, the White House a couple of months back had an EV conference. And the only one they didn't invite is the company that sells more EVs than anybody else, for the simple reason that they're not union. And even though they tried to be a union, his employees don't want to be union. He pays them like there's no tomorrow.
Yeah, they do better with the stock options and everything that they get. There's been comparisons showing that they're at least at level, if not better off. But yeah, you bring up a great point, and I think that looking at guys like Elon Musk and Jeff Bezos, it's a perfect example of just like you said, it should be inspirational, and the reason they're so rich is because look at how much value they've brought to society. It's like Amazon, within an hour, I could get a package at my doorstep. I could get prescriptions, whatever I need is like within 2 hours. So it's like, I agree with you. I think that it's, inspiring, and also like you're paid to the extent that you create a positive value. These are at the end of the day, people that have vastly, improved our lives. And, with Elon, with all the steps he's taken towards sustainability and space travel and everything, like you said, they're leading the EV industry. And the other point too, just being realistic, to me, it's like, okay, there's two options here. The money's either going to be in Elon's hands or it's going to be in the government's hands. And we've seen how ineffective the government is at allocating capital. So why not, give it to the people who, are best at it. And he's really the perfect example, even compared to Bezos. I know he's kind of like retired now, living his best life on his super yachts. Yeah. But Elon Musk, like, he's not buying mansions. He's, all his money, I think, is largely going to go back into moving us forward on what he, thinks is most important, like space travel and the, EVs and all that.
It's for society itself. I mean, people like to badger capitalism. Listen, here's a good question to ask your young folks, people your age. I always ask people when they like to badger capitalism, I ask them this question. Look up what life expectancy was in 1900. In the year 1900, do you know what it is? Vinny, you know what it was?
Oh, maybe
I already know.
Maybe 40.
48 years old. That was life expectancy. Capitalism has driven all that today. Like it or not, that's with pharmaceuticals, with medical facilities, doctors, everybody participated into that as well too. And that's why our society is so much better today. I don't care if somebody made $1 billion letting us live longer. Do you?
No.
I think that's just being, some ways, honestly, for a simple word, it's probably jealousy in some ways. You have this, I don't have this. Well, it's the United States of America. We could all have it.
Yeah, I think that's a big part of it for sure. And yeah, just at a certain point, I think it's just common sense. Like, obviously, there's good ways of making money and there's corrupt ways. Like, we should cut down on the corrupt ways, but we shouldn't stifle innovation, and put a cap on these things that better everyone's lives.
And a lot of these folks are very charitable, by the way, too. There's huge charities. I know Bezos is very, very charity. Elon Musk as well, too. So, if you take away those things, I mean, look at Bill Gates. I'm not a Bill Gates fan, but he gives away a lot of his money. So, people really just don't see that as well, too. And I think at a much, much lower level, on a local level, if you're an entrepreneur and you're fairly successful, we ought to be trying to do things for other people. I had a meeting this morning with some folks from the food bank because that is something that I always had an interest in. I think it's horrible that in the United States of America, there are people actually that are food deficient. It's amazing to think that. But it is true, and it does happen, regardless if it's their fault, not their fault. The bottom line is it's certainly not their kids' fault, right? And they have to eat. So that's an organization that I'm actually thinking about getting involved with right now as well, too. So just on a small and local level like myself, we should be giving back. I made a very good living in this community, and I believe that if you're one of those people, then even if it's on a very small level, you do need to be giving back to what's happening. Because let's face it, we can't depend on the government. The government is to take care of the middle and lower class. Remember, they're crushing the middle class right now with inflation. It's the most horrible tax that you can put on low-income people is inflation.
Yeah. Yeah, we're definitely seeing that. Well, we took a philosophical turn there, but I love it. This is all great perspective, and I think it's important to listen to other people's perspectives. People like yourself who have so much experience. You've built businesses. You've been at this a long time. People can definitely learn a lot. I guess, is there anything else you want to talk about today?
Vinny, I'll tell you, on that same note there's something that people really need to understand. And I always try to tell, when I mentor folks, especially young people, I always try to throw this in because as somebody who mentors other people, you don't want to be that person to tell them how you did everything perfectly. Because a good mentor, I'm able to be a mentor because I screwed up a lot of times. And, if you learn, I tell my kids all the time, please listen to me. I'm telling you this not because I'm smart. I already did it the wrong way. So let me show you how to do it the right way. I have already done it that way, the wrong way. So I think that's really important if we can relate to some of these young entrepreneurs and explain to them why you don't do it this way and why this is more important, simply because, hey, I've done it the wrong way. I can tell you.
Definitely, yeah. So much to be learned, and always enjoy speaking to you. Always, learn a ton and appreciate all your insight.
I think you're amazing. Your age to be doing all the things you're doing right now, not only just this podcast, but, just your interest in the market, interest in real estate. You're a smart guy. I
Well,
like that.
thank you. I appreciate that a lot. Thanks for coming on here. This was a lot of fun. We'll have to do it again. Doug Ferris, everyone.
All right, Vinny. Good luck, buddy. Thank you.
Thank you.
Have a great one.